The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Dell in Texas. Hey, Dell, what's going on?
Hey, Tom.
How you doing, man?
My call. Great.
Thanks for calling. Thanks for holding. Appreciate it.
I love your show. I just stumbled upon it probably, maybe a month ago.
And how'd you find us?
I found you on YouTube.
YouTube. That's a beautiful thing. Well, we appreciate you growling and prowling with us. Welcome to the Tiger family, man.
Wow.
I like it. Totally.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day in the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. Practice makes the master. Always do your best. By doing your best over and over, you can master the art of transformation. By doing your best, the habits of misusing your word, taking things personally, and making assumptions will become weaker and less frequent with time. Market-wise, let's take a look at it out here. We have the Dow Industrials up 34, NASDAQ up 24, S&P's up 9.5, gold contract down $9.75, trading at $1,331 an ounce. Silver down 13 cents at $19.68 an ounce. Platinum down 20 bucks. $1,082 an ounce. Copper off 2 pennies at $2.23 a pound. Light sweet crude off 52 cents, trading at $44.23 a barrel. Bonds, you have the 10-year down 3 ticks, 132.04. 30-year up 6 ticks, 171.21. King dollar up 464 ticks, trading at 97.51. The euro is down 63 at 109, and the yen is trading at 106. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at it. What do you have? Okay, so your SPY is trading at 217.11. You're in an ABC structure on the way up. Price projection on this baby is 218.90. I expect you're going to see that come next week. Now, the shocker out here this week was the NDX 100 as well as the composite. And what we have is this. The NDX 100 and the composite took out a B point of an ABC structure on the way up, took it out on Wednesday with volume. Now, what that sets up is this. The 3Qs right now are trading at 113.57. Your price projection for the finish of the 1-to-1 ABC structure on the way up is 121.99. That 121.99 is going to what? Is going to bring it over the highs that were established in December. The high there is 115. So it's pretty intense, where this market wants to go right now. Yeah, we got 115.75. The composite, we take a look at the composite. This is what you have inside the NDX, the NASDAQ composite. Composite also took out the B point on Wednesday, took it out with volume. You bring this back, the composite price projection is 5,499, and the highs of the composite is 5,231. So that's saying the composite also is going to take it out. Now, with that said, what do we have coming in next week? Well, next week, folks, is going to be a highly volatile week. Lots of information coming in the marketplace. You have the Fed meeting. You have a 2-day Fed meeting, Tuesday, Wednesday. You have Apple coming out with earnings. You have Facebook coming out with earnings. You have Google coming out with earnings. And you have Amazon coming out with earnings. So what I expect you're going to see inside this NDX 100, whether it's 1, 2, 3, or all of them, that's what's going to force the NDX up, finish that ABC structure on up, and then guess what? Then I think it's all she wrote. Gold contract. What do we have with gold? Gold contract, folks, is trading at a price point of $13.23. We did out here today, you did volume of 210,000 contracts. Yesterday, what happened is that we got down to a price point of $13.10, and we had an expansion of volume. We did 253,000 contracts. So today, what happened is that it tried to get the higher price, had lighter volume, failed. What does that set up? That sets up another run down to the $1,310. And what I expect we're going to see here, more than likely, is we're going to see this get into the $12.75. And what I expect that's going to be from, by the way, is more than likely, we'll get into the dollar for a second because the dollar wants to go higher, but more than likely the volatility that we're going to see is going to be all about what the Fed has to say after their meeting. Now, this meeting here is not a meeting that they take questions afterwards, but they will come out with a statement. Bonds. We go over and take a look at the bond market first. Go to the 10-year bond. What we have with the 10-year bond is this. 10-year bond yesterday. Now, this is going to be wild how this is shaking up because we have harmony in the marketplace here. When we start putting together what the NASDAQ and NDX wants to do, what the SPY has already done, what the bonds are doing. So, the 10-year bond has come down from a high of 134. Right now, you're at 132.03. 10-year bond, as well as the 30-year bond, got into lows yesterday with an expansion of volume. Yesterday, the 10-year bond had 1.2 million contracts. Today, it tried to get to a higher high, couldn't handle it, has lighter volume. That's a large ABC structure on the way down, more than likely. That's what it's set up. And the A point on this is 134.07. Your B point is down there at 132, let's say. So you're talking a couple bucks, which will get you into approximately the 130.16 area. And guess what? Where we broke topside from on the 24th inside the 10-year, that is 130.21. So I expect you're going to see that get down into those levels. We go up and we take a look at the 30-year bond. Same type of setup is happening. 30-year bond up 5 ticks today. It's already failed, however. And what you have here is this. 30-year bond is down from 177. Yesterday, you go to a lower low. You do it with 259,000 contracts. You get to 169. So your A point on this is 177.11. Your B is 170. So we got 7.5 points, or 7 points and 11 ticks. Your C point is 172, and guess where it lines up, folks? Lines up the same way, coming back to where it broke out from, which is the 165 level. Now, the culprit. Let's go over to King Dollar, because here's the culprit, folks. Correlation is just the opposite. If we take a look at King Dollar, what you're going to have is this. King Dollar out here is up 469 ticks today. You are up not on volume, okay? The bottom line, it doesn't have the volume juice on it. This is what we did with King Dollar, though. King Dollar got to a high on June 24th. It hit 96.70. 66,000 contracts. Then it built cause. It went sideways for almost 3 weeks. Takes out the high this Tuesday with light volume, 24,000 contracts. Here's the kicker. Yesterday, tried to get to a lower price. You were going down. You got down to 96.76, which didn't hit even the top of the 24th. Rejected it. You go higher. King Dollar wants to make its way up to this 98, 91 area. You might even see 100. And what that's going to be all about is that more than likely you're going to have the Fed come out with their statement, and particularly that you can't ask them questions, they're going to come out saying what? Saying that we still plan on going up a 0.25 percentage point before the end of the year. Rhetoric? Maybe. But bottom line, that's how I see this set up next week. Big weekend next week. Stay right there. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Some of the higher volume stocks we have out here today, let's take a look at them. You had Advanced Micro Devices, that's up 64 cents. You had PayPal Holdings down 287. Intel is up 32. We got Apple down 87. Apple's going to be coming out with numbers next week. Starbucks is stable. That was down about $4 last night after the close. Come out with their numbers. That's up 31 cents. You have Ford Motors off 8 cents. Marathon Oil is down 27 cents. We go into some of the Dow stocks. This is what we have happening inside the Dow Industrials right now. You have ExxonMobil down 2 cents. We have DuPont up 63. JP Morgan's up 29. You have Procter & Gamble up 31. Let's go see where GE is. GE came out with numbers. GE is down 63 cents, trading at 31.93. That is gapping down with some volume. So what you have with GE, if we pull GE back, what you're going to see inside GE is that this is an equity that is basically, if we pull this back, it's pretty amazing what we do have with GE. So GE, the high of General Electric was in 2000 at $60. Goes first leg down, took it down into 2000 to 2002, took it to $21. You have a counter trend bounce that went up to 2007, so you're up 7 years to 42. Next leg took it down into $5, and this leg here is only bringing it up to ice. So GE's got a slight problem on its hands. That problem being that we'll see how it handles the 29 area. More than likely, you're going to see this down at the 21 area. So it's pretty intense when you actually do look at GE. We take a look at the Amazon. So the numbers that are coming out next week. Next week's going to be a dynamic week, folks. It's going to be highly volatile all over the place. So Amazon's trading at up $1.73. We are at $7.46. And bottom line is that, Amazon is a psycho stock, meaning this thing can gap up on an earnings number with $50, $100 is not a lot. And even percentage-wise, it's not a lot because you're talking about a $746 stock. That being said, Amazon's coming out with their numbers on the 28th. Now, Amazon's coming out at 1 minute past 4. So check this out. If we go over to Google on the 28th, Google comes out a split second, probably a micro hundredth of a thousandth of a microsecond after 4 o'clock. Google's trading 741. They come out the 28th also. We go look at Google, and what you're going to see with Google is this. Google's been in this consolidation, and the consolidation that we're talking about, the high of the consolidation is $775. That was established in December of 2015. The low of this consolidation is at $663. The way this is set up right now, it looks to me that Google, no matter what they say, is not going to get enough juice to go topside. And the reason I'm saying that is this. When Google came down on their last numbers in April, this is how it shaked out. We went from 769 down to 713, and then followed through the next week to 689. Those 2 weeks, we did 14 million shares as well as 13 million. Well, what we're doing is that we're going up on 7.7 million. So the correlation, okay, is that you're going up on 7 million into a downdraft of 14. Now, we'll certainly wait till next week and see how it crawls all the way up, because what I do expect you're going to see is that Google, can crawl up to that swing point, and that's quite away from where we are. That swing point is 769. You crawl up there with lighter volume, big problems. Now, Facebook, different animal. Facebook is at $120.87. Facebook comes out the prior day, right at 4 o'clock, on the 27th. And if we take a look at Facebook and we put Facebook back, what you're going to see is that Facebook is going to close, it looks to me like it's going to close over its highs today. Now, we're at 120.84 in Facebook. This week thus far, I've done 95 million shares versus 106 million. Well, Facebook very well could also do the volume. And if it does the volume, it's like, okay, man, are you doing another ABC up? It looks to me like Facebook is really going to get some juice underneath it. And the juice that 77 to, let's say, 25, that's 33 bucks, 90. That's, wow, it's interesting. So it's not that much further than where it is. There's a price projection out there of 123 to 124. We'll see, but Facebook is absolutely capable of going dramatically higher than that after the close. Apple, now, this is going to be really intriguing here. Apple is on the 26th, so picture this. You get the 26th, Apple's coming out at 4:30 in the afternoon. You get the 27th with Facebook. You get the 28th with Google and with Amazon. The way Apple's being set up, Apple is down 84 cents today, $98.59. We pull this back a bit, and what you have with Apple is that Apple's having a hard time holding the price point of 101. Let's see. So on this weekly, we were at 140 million going into 124. So that is saying that Apple, as we come into next week, will go after its high of 101 again. That's the last swing high. The last swing high in Apple is $101.89. That being said, it has a monster supply line. The supply line on Apple that it's facing is this. Last time it came out with earnings, stock goes from $105 to 92 with 349 million shares coming out of the stock. We're going up this week with 140 million. That is problematic in a huge way. So what I expect you're going to see out here is that you're going to see highly volatile markets. The Tuesday, Wednesday is the Fed meeting. They will come out with the statement. I believe it's going to be at 2 o'clock. We'll get you the exact number. Bottom line, what you can see there, let's see, statements. Yeah, July 27th, you're going to get the statement at July 27th, which July 27th, come on. Sorry about this. Yeah, so that's Wednesday. So Wednesday, 2 o'clock, you're going to come out with a statement. That's how this is shaking out right now. That is going to basically probably kick off the high volatility. So when we put the market together on the first segment, folks, okay, it looks to me that your first volatility coming in the marketplace next week is going to be the speculation of what the Fed is going to say. When you take a look at how the dollar is trading, the dollar is trading as the Fed would go up on short-term interest rates before the end of the year. And if that's the case, the real kick is going to be like, okay, so if they say they're going to go up, you can see the dollar going higher, metals going lower. But realistically, you wouldn't be able to, I wouldn't be able to see the NDX finishing up that ABC structure on the way up. But guess what? The market just might take it another way. And what you have after that is those big numbers coming out on Wednesday after the Fed talks at 2 o'clock, and then on Thursday. You stay right there, folks. We're coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The Dow right now is up 42. You get the NASDAQ up 26. S&Ps are up 10. And, folks, as you come over to our website at TFNN, now, as we've been walking through the marketplace of what kind of a week we're going to have next week, Tuesday, Wednesday, Thursday, all big action. I am going to be doing a workshop for my subscribers of Market Insights. That is going to be on Thursday night. The earnings are out. Now, what's next? What's the next trade? Where are we going to look for? Okay? So, you come over to our website at TFNN. You can sign up for this work. You can sign up for my newsletter for 30 days, absolutely free. You're going to get the newsletter for 30 days. You're going to come into the webinar Thursday night. You also get a free copy of my book, The Art of Time in the Trade. Bottom line, is it great value, couple $100 value, and what are we going to be talking about? Well, we're going to be talking about how is the dollar going to affect oil and metals market going forward? Do interest rates, how are interest rates affecting the housing market? Will Brexit have an effect on our marketplace? You know, we'll see how that shakes out. Then it's going to be talking about what type of option strategy can you put on coming into the fall. You got to remember something. What is really cool here is this. We're not only at highs in the marketplace, we're finishing up an ABC structures at the highs of the marketplace. You're coming into the end of the month window dressing, and guess what? You're coming into August and September and October, which is what? Which is hurricane season. So it's going to be pretty wild watching this thing shake out. If you'd like to come to this workshop, you come to the front page of our website at TFNN. You can sign up for the newsletter. As I said, free for 30 days. You get the workshop, you get the book, you get 30 days in the Tiger's Den. You get all of the above. So check it out either right now or over the weekend. Let's go take a look at Skechers. Skechers is getting toasted and roasted out here. Skechers, of course, is the shoe company. Bottom line, they're having a problem. Hit a low out here today of $24. The high for the year is $54. And when you take a look at this, you talk about monster volume. There's never enough room to get out of the market, folks. Bottom line, they get 29 million shares traded. If we do take this and we put this back on a weekly basis, what you're going to see, which is clear as a bell, is that we had a high volume low at $24.56. That was from November of 2015. What we had done is this. This is a classic if you want to see what building cause is all about, what the art of time in the trade is all about, and this is what it is. Skechers had already come off its high of $54. That was established in August of 2015. Goes straight down to $24. Then what does it do? Okay, I talk about things don't go down, up forever, down forever. You have to build cause, folks, in order to go up or down. And building cause is a consolidation back and forth. So what's the equity do? First off, on a weekly, you have a high volume low at $24. That was established November of 2015. You go higher, and we go up to 34, and you do 10 million shares. Now watch this. That 10 million shares was established March of 2015. 34 bucks. Well, you come back down, and you come back down with 17 million shares. Your 17 million shares is going against your last swing point that was established out there of 28 million. So what do you, at that particular point, what this equity is saying is that you came down with monster volume. You did a counter trend bounce, which you have to, well, you don't have to do, but you always do. And you did that with 10 million. You come back down again, and what do? You come back down, you have an expansion of volume again. You go back up. What happens is that when you do counter trend bounces and you go back up, you can normally glean more information about what the equity is doing. So we go back topside again. As you go back topside, you're doing 16 million. And the difference is the 16 million, you're coming into 55. So you're coming into a supply line that is just a monster. What ends up happening? You go back down, and the volume expands again compared to how you went up. We expanded with 13 million. Now watch this. This is where it gets really wild. We went up the last four weeks, excluding this week. We go back topside, and you go with 12 million. So your 12 million was coming into 16 and 25 million at the highs, was coming into 55 million. So your correlation, when you put it together, is 12 million to 55. And then what happens? It blows out what it's done today, this week, 40 million shares. So what it's going to do now? Well, you get a monster ABC down. Your A point on this is $49. Your B point is 24. So you're talking 25 bucks. Your C point is 34. So what do we got? You set up at $9, man, and that's a pretty intense. $9 can bring you all the way back to the lows that were established in February of 2014. That is how equities, currencies, futures, all of the above, folks. You know, wide price spread, accelerated volume on the way up, perfect. You get no volume at highs, you're big trouble. Volume comes off highs, big trouble. Full retracements from tops to bottom, you have it all in spades. It's all right there. Our phone number is 877-927-6648. Let's go take a look at the financial market, the XLF. So, XLF right now is at 23.68. And the high last 6 months is 23.93. Okay, so somehow, some way, this thing is going to try to claw its way up into the 24, 27 level. The volume is dying on the vine. You know, we had done last week. Last week it had a shot of getting to higher price. You know, we did some decent volume, 231 million. This week you're only doing 128. But what I do expect you're going to do is you're going to try to tag this swing point. The reason I'm saying that is that we've got within 10 cents of it. You know, if you are going into swing points and you really get within about 10, it depends on what the number of the stock you're trading with. I mean, we're dealing with a $23 stock, but a $23 stock, 10 cents, you're going to hit it. This wants to get tested. You start putting that together with the aspect of the other indices and where they want to go, you can expect to hit it. Starbucks, SBUX. So Starbucks come out with numbers last night, didn't make their numbers. Starbucks is trading at 57.79, and this is like the ever-ready bunny. You know, it's an equity that has got hurt, no doubt. I mean, the highs in the last 6 months are 61. But that being said, guess what? Starbucks is not done yet either. These are things that just aren't done. Starbucks is trading at 57.80. And what you have here is that 59.10 wants to get hit. You know, 59.10 is where it gapped down from the last time I come out with numbers. And, you know, you know, bottom line, I'm a Starbucks fan, but I can tell you something, that the bottom line is that I had a cup of coffee at Kawa Coffee, you know, that just opened in Bel Air Bluffs, and they blow it away. We get Carlos from California. Carlos, what's happening?
How you doing, Tom?
I'm doing great,
How are
man.
you?
I'm doing great. Yourself?
Oh, very well, thank you.
That's awesome, man.
Thank you very much.
Hey, we heard some of your brothers. Tommy and I were talking with some of your brothers the other day from Houston, Texas.
Yeah, actually, I have some people. Actually, a lot of people who I have referred to your program, because they keep asking me, and they say, no, go. This is the best place. Go ahead.
Well, you know what? When you come, this is a beautiful thing. You stay right there. We're coming right back.
Yeah, I'll be here.
We got Carlos from California. We want to hear from you folks. Our phone number is 877-927-6648. We're coming right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Talking to our man Carlos from California. And what are we going to talk about today, Carlos?
Well, it's platinum, Tom.
Okay.
Okay, I've been shorting platinum because I switched from long to short, and I know it's only 2 weeks, but every time it drops, I get out, try to go high to the resistance that you can see around 111. Okay. And actually, I need to ask you, is still this approach that I'm doing viable to get better drop in the future on this future? Because I'm out right now, completely out. I got out this morning.
Okay, that's cool. So, you know, in platinum, you know, out here today, what folks have went from 1105 to 1087. I think you have a good trade on. I mean, you know, my take on this metal market is that, you know, the run has been extraordinary. And when you trade both sides of the market, I think that's the right side of the market right now. It looks to me that, you know, when you take a look at how this dollar's trading, what I was trying to figure out even the last few weeks is like, okay, man, why is this dollar moving up, right? And the bottom line is that fundamentally you get a couple different things that reason it would move up. And one of the biggest ones, folks, is that if you buy U.S. bonds and you're in a foreign market, you have to transfer it into U.S. dollars in order to do it. So that puts demand into it. The second part of it is, of course, because our markets continue to going up. If anyone outside the market, meaning big sovereign funds, if they buy into New York Stock Exchange, it has to go up. And what I've been looking at today and even this week is when I saw that Fed meeting, I says, you know what? And our man, Mr. Dave White, he said in the den, I think he's so right, man. Yeah. Is that, you know, what is the wolf? Let me get this. Cry the Fed. Yeah, the Fed cries wolf on a continual basis. You know what I mean?
Yeah.
So what I think we're going to have here is that I think we're going to have an aspect that they're probably going to say that they're going to try to go up again in December. But I don't think that's going to happen. But I think that will put some heavy selling pressure inside the metals. You know what I mean? So
right.
It's going to be pretty wild, man.
Tom, can I make a comment real quick?
Absolutely.
Okay. I know when I call, I ask you for things that may sound obvious, but for me, it's a real challenge every time I'm doing a trade. And thanks to your help, I've been able to done a lot of things as far as trading. And I know there's a lot of Hispanic people who is listening, and they think this is a lot harder than it looks. But with your help, it's been a lot easier. You make things sound very simple. And that is the reason I keep encouraging people that I know, people who listen in the radio and when I'm calling, that if we try to follow or to subscribe to your newsletters or to any other of your hosts, is the best approach. Because I hunt for a lot of opportunities all over the place, and when I found you, I knew that was a real thing, because you're an honest person, and the first thing you try to help other people.
Well, no, listen, man,
I
really appreciate the feedback, too. And you know it's been pretty cool. So check this out, folks. What happens, unfortunately, is that I'm lucky. To me, I've been doing this a long time, so I can look at markets, and I know that what ends up happening, whether I'm talking fast sometimes with my accent, or oddness, not explaining things totally. And my son has helped me a lot, like saying that, hold it, man, you got to explain, what is a complex ABC? What is this? And that's really cool, because I do understand, that there's people coming on every day. And what happens, folks, it's all a theory. That's what it comes down to. But it's pretty consistent. So I appreciate the feedback too. Hey, I'm going to switch gears. I'm going to switch gears on you for a second, because, we know that you're from Mexico, and all your friends are probably from Mexico. So check this out. This is pretty cool. So Trump wants to build a wall, right? Yeah. Well, the thing that's going to be amazing here, folks, is watching this thing shake out. Now, the bottom line is that, I can't stand Trump. That's the bottom line, okay? But when I start thinking about this, right, I'm saying to myself, okay, so the aspect of, like, how are you going to do it? And I was sitting at home one night smoking a cigar, right? And I started thinking, I think you had called about CEMEX a long time ago, right?
Yeah.
Okay, so check this out, folks, okay? If, in fact, it ever happened, and to me, there's no way it's ever going to happen, okay? But CEMEX would end up getting a contract, because guess what? Folks, what happens, we build a lot. I'm building cement every freaking day. That's why I just come back from, okay? What happens with cement, you got to be next to the cement, folks, okay, to get the cheapest cement. So CEMEX, I start looking at it, I says, oh my God, look at CEMEX, they're along both sides of the border. They're everywhere. They're in Tampa, okay?
Yeah, the largest.
Yeah. So I start looking at that, and I start cracking up. I says to myself, oh my God. And then I start thinking, like, when I'm listening to him about the speech last night, I'm saying to myself, if you think America is that bad, it's like, okay, where were you in the 60s? Because, folks, I'm a 60s kid, and I remember, in the 60s, folks, our cities were on fire. I remember when Martin Luther King got killed, it was a very tough deal. But guess what? Then I remember where Trump was in the 60s. He was a freaking draft dodger. That's where he was. So when I start putting it together, it's like, oh, this is pretty cool, man. And what always has driven me crazy is that everyone else that never went in the service always wants to have everyone else's kids go killed. It's like, you got to be kidding me. Listen, I'll stop the politics. But the CEMEX deal was like, oh, my God. Okay, put your head into it, folks. That's the bottom line. It's anyway. It's a. Hey.
Well, thanks a lot, Tom. Take care. And,
okay.
Remember, every time I'm calling, there's one more person from my community, or a lot more from my community, that are trying to get to you.
That's a beautiful thing, man. Well, listen, we appreciate it. We appreciate it. And
Thank you very much.
Thanks, man. And folks, I will go on the other side. I know in the den they're saying that Hillary is a Wall Street warmonger. Listen, you know what the sad part here, folks, is that politically we're in trouble. There's no doubt. Synergy, I thought, would have been really freaking cool myself. But anyway, that's I know we're in trouble. But anyway, I'll go on. I'll go on. We'll go on to next week, because next week, no doubt, is going to be a dynamite week inside the marketplace, high volatility, all of the above. If we go and we take a look at the XAU, the HUI, this is what you have happening in the XAU. XAU is trading at 109.92. What you're going to see on a weekly basis is this. You're going to see that we came down Wednesday with big volume. We go up the last 2 days with lighter volume. And depending, 105, the number is this. The XAU would have to close over 105.08 this week in order to get the higher price. You stay right there, folks. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is up 43. The Nasdaq's up 23. S&Ps are up 9.5. And, when you take a look at the Dow out here today, folks, bottom line is that, it's not that they had a big price spread, but they couldn't get the Dow lower. The Dow was trading at 18,491. And bottom line, you get 18,561. Inside that Dow Industrials, putting the juice into it today, you get American Express up 1.3%, Visa's up 1.2%, Microsoft's up 1.2%, and Verizon's up 1.2%. If we take a look at Verizon, it's going to be pretty wild watching how this whole thing shakes out, because Verizon looks that, the rumor mill coming across, it looks like Verizon is near closing the deal on Yahoo at a $5 billion deal. What's intriguing about this Verizon deal is that, Verizon themselves came out with streaming TV way before anyone did, and it never went. So it's going to be intriguing, that they know that business. That's the bottom line. They know that business, and you know what? I suspect that they can get some breath under Yahoo. Let's go take a look at the oil market from one of our tigers out here. So what we have with oil is this. Oil market gets to a lower low, has the volume behind the move. What we've done out here, we've done 406,000 contracts. You're trading at $44.18. Now, what happens is this. Once this got into the 44.35 to 44.50, that sets up that this baby can actually get down to 41 to 40. That's how this setup is, man. I mean, it's a drift down today, but it has some decent juice behind it. If we put this on a continuous contract, what you're going to see on the continuous contract is that the next layer where it would get some support is also at 42.50, and we're at 44.15. What I expect, folks, next week is high volatility, and at the beginning of the week, meaning on Wednesday, that's when the Fed's going to come out with their statement. That is when you are going to see that dollar probably move higher. That is when you're going to see the commodities move lower, and saying that, okay, I expect that all of this is, is a retracement in commodities that want to go higher. Because I don't believe for a second that you're going to see rates go up. What I do believe is that the Fed they'd love to go up in rates because, guess what? The market's at highs. There's plenty of people working. Cash flow is flowing, so they should be going up, but guess what? They can't. The reason they can't, folks, is that when you look around the world, the rates around the world, we are so much higher, it's amazing. So picture this. Even if they wanted to go up in rates, what happens is this, is that whether it's the Japanese, whether it's the Europeans that are in negative rates, what they do, if we were in negative rates, what would we do to make 1.5% or 2%? If we had to pay to put our money in the bank or send our money to the United States and they'll pay us, what would you do? You'd send the money to the United States. What has happened is that individuals like you and I are not doing that. What is happening in Asia, what is happening in Europe, what is happening in the Middle East is what? Is that people are putting their money in and they're charging them, and then the banks, the sovereigns, everyone else, the large institutions, folks, are coming into our bond market and buying our bonds. And they're not buying our bonds, okay, because someone is asking them to buy our bonds. They're buying our bonds because our bonds are paying 1.56%, a 10-year note. They know they're going to get paid back, and they're making a huge amount of money. So no matter what the Fed wanted to do, there's more demand than there is supply. And that's the name of markets, folks. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great weekend. Have a safe weekend. Look forward to speaking to you right back here, 8 o'clock Monday morning. Go get them, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.